Hello my dear CA final students, hope your preparation is going really good, and in this video I am going to quickly solve CA final mock test paper 1 Jan 2026 and mock test paper 2 I will be uploading. This is full, not just MCQ discussion, this is full paper discussion I will be doing in this video, and MTP 2 video also I will be releasing maybe in a day or so. And already in our channel we have uploaded the marathon related to GST amendments video, MCQ workout marathon, which is of course covering all the ICA case study based booklet, all the MCQs, and RTP Jan 26 also solved and it is uploaded in the channel. So please do check those videos also, will be definitely useful for you. And let us quickly go into this video. So first we are going with the case scenario. Just to make it very quick revision, I have of course gone through the MTP and like highlighted what are the key points and want to discuss all these things so that we can save the time. And first technique, first of all we'll read the MCQs, then we'll go to the case study. So in this first question, the first question is all about what? So in the first question they're asking here, first of all understand in each question they have asked in regarding different months. So please be careful when you're reading the question, which month information they are asking. Okay, here for August month they are asking value of supply, and the second question is all about TDS for September month, and third question they are asking value of supply for October month. Next, time of supply and applicable GST rate for the fourth MCQ, and place of supply for a event held in Bengaluru, Karnataka on Japan. In both the cases, what is the place of supply, right? Fine. So let us go with the question here, case scenario. In this case scenario, if you see, and any question you should identify, sir, who is the person, what is his status, individual, company, all these things, and where he is registered and what he is doing. These things are very crucial for us. So here in this question, this man is Mr. Dinal Patel, registered in Delhi regular scheme, and is dealing with both goods as well as services. And if you see here, they have given information for the month of August regarding his outward transactions, and in the question also they have asked what is the value of supply for the month of August, whatever the transactions he made, what is the value of supply? Okay, so the value of supply, if you see, so he has gifted a watch worth 50,000 to Mr. Sudipta Banerjee, an employee. No other gift was presented. For the employees, you have a relaxation till 50,000, correct? So it is not a supply. So here this is 0. Next, he provided free training on e-invoice and e-way bill to all its agents free of cost. See, agents, he is like in the question they have given, he is providing goods and services across the country with the help of agents network also, having agents network also. So for the agents, he is giving some training, that too without consideration. Principal and agent schedule 1 para 3 will trigger only if it is related to goods, but here it is services. So here again schedule 1 will not come into picture, so no consideration, no supply. Again here it is nil. So this is the information for August. So if you see for August month, what is the answer? The value of supply is nil. So option number D. Next, if you see the next one, he provided following services during the month of September, wherein he received payment of full contract value subject to deduction of TDS under GST law. So he has received certain payments subjected to TDS under GST law section 51. Here, first of all, this is exactly a book back question from ICAI study material, and there is a mistake given here. This supply of printed books and printed postcards to West Delhi Post Office TDS is applicable, but TDS is applicable only if the taxable value exceeds 2,50,000. Taxable contract value exceeds 2,50,000. Here, taxable value is 2,72,000 including GST, and in this MCQ they did not give GST rate itself. If you refer ICAI study material book back questions, in ICAI study material book back questions, the same question is given here, the same question. If you see the same one here, regarding this postcard, all these 9,72,000, 7 lakh on the 2,72,000 taxable, and bottom of that they have given the GST rates. But in this MCQ they have not, like 18%, but here they did not give the GST rates. So there is some error here in the question actually. So considering 18% here, but the answer they have given considering all these things, but they forgot to give the GST rate here. So here also no TDS because it is not exceeding 2,50,000. Okay. And only taxable value should exceed 2,50,000. Here exempt value you should ignore. Next, again, supplied service of maintenance of street lights in municipal area East Delhi. Again, sir, this is related to article 243W services, where 75-25 ratio, you remember there is an exemption for this. If you don't remember, then you should definitely revise exemptions properly. So there is an exemption for this, where you are providing services, any person providing services to these people, government, the activities which are entrusted to them under article 240 WRG, where the value of goods not exceeding 25%. Here value of goods used is not more than 25%, exemption is there, so no TDS here. Next, supplied services of interior decoration of Andhra Bhavan located in Delhi and service contract value is 12,39,000 is entered with the government of Andhra Pradesh, registered only in Andhra Pradesh. And if you remember, location of supplier and place of supplier falling in one state and recipient is registered in another state. Recipient here is Mr. The Andhra Pradesh, recipient is registered in Andhra Pradesh, sorry. But location of supplier and place of supply here is falling in Delhi, if you remember. So in that case, if you have understood, location of supplier is Delhi, and because this is related to immovable property, place of supply is also location of immovable property, so place of supply is also Delhi. So because location of supplier, place of supply is in Delhi and recipient is located in Andhra Pradesh, here also no TDS. That means they give all above values are inclusive of GST wherever applicable. What is the GST rate, sir? That is important, no? So they did not give GST rate, but still fine. An error in MTP, it's okay. So the answer is nil. Again, TDS will not come into picture here. Now, coming to the next one. So the next one is Mr. Dinal rents out commercial building owned by him to Bharat. In this para only, you should be little bit careful of what is happening between whom and whom. Here, see, Dinal is renting the house to Bharat, and the rent is 19,50,000. Okay. Now, for that, Dinal is paying maintenance charges. So the owner is paying maintenance charges 1 lakh and he is recovering it from Mr. B. Okay. As charged by the local society, these charges are reimbursed to him by Bharat. That means expenses incurred by the supplier and recovered from the recipient. So this will be added to the value of supply. Okay, fine. Also, Dinal has paid municipal tax of 2,85,000, which he has not charged from Bharat. If he has not charged from Bharat, any taxes charged from the recipient only will be added to the value of supply. So that will not be added to the value of supply. So the answer is 20,50,000. That will be the value of supply here for question number 3. Option D. Next, time of supply and applicable rate of GST. So the next paragraph, if you see most of the cases MCQ case scenarios, the paragraphs will be in such a way, like from that particular paragraph, question 1, 2, 3, 4, the serial order also will be like that, para 1, para 2, para 3, para 4, like that, and question also will be 1, 2, 3, 4, like that only. Most of the cases it is given. Fine. So Mr. Dinal entered into a contract for supply of service with Saurashtra Associates on 1st June, commenced the provision of service on 5th June, completed the provision of service on 10th October, invoice 20th October, payment by check 15th October, entered in the books same day, amount was credited to bank account 18th October, and in the meantime, rate of GST on the said service changed from 12% to 18%. 12% is old rate, 18% is a new rate from 16th October. So here you should see time of supply and rate, applicable rate. See, first of all, when the change is happening, you should see. Change is happening on 16th October. Whenever there is change in rate of tax, you should see where is the completion date, when the service is completed. Sir, in this case, service is completed. See, first of all, change is happening. Now, write down before, after. So, when service is happening, you check. Service has been completed on 10th October, if you remember. 10th October completed the service. So, it is happening before. Completion is happening. Simple way of solving this. Sir, completion is happening before. Okay. Completion. Now, sir, before it is happening, date of completion of service never will become time of supply. So you just check along with completion who is there. Invoice is there, a payment is there. If invoice is there, invoice will be the time of supply. No, sir, payment is there, then payment will be the place of supply. Sorry, time of supply. Both will not be there because then there is no point of section 14 only. Okay, so either invoice will be there or payment will be there before. Whatever is there, that will be time of supply. No, sir, both invoice and payment are after the change. Then whichever is earlier will be the invoice and payment, whichever is earlier. If you see here, invoice is raised on invoice issued on 20th. Invoice is issued on 20th October. So invoice is issued on 20th October. So invoice is after the change. Fine. Next, payment we will check. Payment by check 15th October entry. If you see, payment entry is on 15th October, credit is on 18th October. Okay, credit is happening on 18th October. Now change has happened on 16th October. Correct. So generally, if you see date of payment, we will take entry or credit, whichever is earlier. But here, when there is change in rate of tax, you will follow the same principle: date of payment, entry or credit, whichever is earlier. When from the date of change, if the payment is credited into the bank account within 4 working days, then only you will follow this rule. Otherwise, you will take date of credit itself as date of payment. So here, entry and credit, if you see, sir, change is happening on 16th October and credit is happening within 4 working days only. So you will compare these two and we'll see whichever is earlier, that will be the date of payment. Which is earlier? 15th October is earlier. So payment is happening before the change. Completion of service also before the change, payment also before the change. So whoever is there with completion, that is payment is there, invoice is not there. So time of supply will be 15th October, and of course GST rate, applicable GST rate will be the old rate, 12% here. Clear? So the answer is here 15th October is the answer. Okay, that is what time of supply. Next, coming to place of supply, a simple one. In the month of December, Dinal hired the services of Sun Limited, an event management company registered in Delhi. Event management company is also in Delhi, and if you remember, Dinal is also from Delhi, for organizing 2 events, one in Bengaluru, Karnataka, and the other event in Japan. Sir, because the recipient is registered under GST, Dinal is registered under GST, both the cases the place of supply will be the registered address, that is Dinal is registered in Delhi. So Delhi will be the place of supply for both the event happening in Bengaluru as well as Japan. Okay, Delhi and Delhi will be the answer. So this is case scenario 1. So with this, we are done with case scenario 1. DADBA is the answer. Okay, fine. So that is what the point. Sorry, there is one more last question. Compute the value of exempt supply for the month of September. For the month of September, what is the exempt supplies he made? Okay, if you see, sir, the information is related to different months, and in this beginning paragraphs, if you see here, it is related to August month. Yes, here there is something related to September, and September, if you see, sir, here we have exempt supply 7 lakh worth exempt supply. Okay, so 7 lakhs plus here this is another exemption 3,50,000, 3,50,000, and here it is taxable only, but TDS will not come into picture. And next October started, so September month only this one, these two are there. So 10,50,000 is the answer. So the value of exempt supply, if you see, 10,50,000. Option B. Okay, so with this we are done with case scenario 1. Let us move on to case scenario number 2. So yes, before going to case scenario 2, obviously we'll be first studying the questions, MCQ questions. Now, amount of opening ITC available for availing and utilization on registration. So the time of registration, what is the ITC available for availment and utilization, we have to see. And in relation to transaction between Mr. Mohan with Mr. Mohan, time of supply of goods, so toss of goods we have to see for the purpose of payment of tax. Okay, next, amount of total penalty which is leviable under section 74A with respect to payment of tax on delayed disclosure of outward supply, total for both. This is important, please understand, total for both CGST and SGST. That means total figure of late fees you should tell, penalty you should tell, sorry, not individual amount. Sometimes they will say each CGST and SGST. If they say each, that means CGST, SGST, they make you like, if the answer is 20,000, the option should be 10,000, you should be selecting if they have asked the word each here, but they are asking the word total, so please be careful. Okay, fine. Next, effective date of registration, simple one. Value of inward supplies from solar panel under section 15. Okay, amount of total interest CGST and SGST to be paid nearest to rupee under section 50. Okay, with respect to delayed disclosure of outward supply. Okay, next, assume, here they also give assume 365 days in a year actually. Next, so that is what, and 13th question is altogether a separate question, 13, 14, 15. altogether different independent MCQs. So let us see the case scenario here. So if you see the case scenario 2, so it is all about Process Limited commenced business of trading of goods in state of Assam. Okay, Assam state, and this is a company, right? Process Limited. And they have started this on 1st April 2024. Aggregate turnover of the company crossed 20 lakhs on 31st May and 40 lakhs on 15th July. Understand, when you are dealing with goods in Assam, the threshold limit is 40 lakhs. So the date of becoming liable for registration is 15th July. And the company made an application for registration under GST on 25th July. Registration certificate granted on 30th July. You know, the effective date of registration here is obviously, because it is applied within 30 days from the date of becoming liable. Sir, 15th July is the effective date of registration, and whatever the inputs they are having on 14th July, only inputs lying in stock, work in progress or finished goods, you can take ITC. So here, inputs held in stock, input services, if you see on 14th July, services you cannot take ITC, only inputs you can take ITC. So 14th July is the relevant date for us. If you remember, there is an MCQ regarding this. The amount of opening ITC available for availing and utilization is 15,000. So option A is the correct answer. And there is something regarding effective date of registration. Yes, effective date of registration is also there, 15th July. So we have covered 2 MCQs here. Next, remaining thing and all not required here. Yes, they have opted for monthly filing, all these things, regular scheme. Company exclusively engaged in supply of taxable goods only. This is again one more time they are stressing. Here in Assam, there is 40 lakh threshold limit because they are exclusively dealing with goods. So that is for us. And ITC, yes, they have given on different dates whatever the stock is there and whatever the services are there. Please understand, ITC available only on inputs, not on input services. Okay. Next, during the month of January, sir, company has installed solar panel at the office premises, whatever it is, office premises. I seriously worry about, sir, what and all mistakes they have did in this MTPs premises. No, they have removed Prem word and they have added Mohan word here, I guess. Okay, fine. In details regarding the installation of solar panel were as follows. If you remember, solar panel purchase, what is the value of supply is the question. List price of solar panel 5,50,000. Additional information not adjusted or given effect in the list price. Okay, so this is something extra information. Trade discount recorded in invoice 3% on list price. So list price is 5,50,000. In that, if you give minus 3%, if you take, so it is 5,33,500, and local taxes paid 15,000. Yes, cost of packing, outward freight, loading, unloading, installation, all these are as condition of say 12,000. There should be added. Okay, so this is the only information regarding the solar panel. Okay, so 5,33,500 plus 15,000 plus 12,000, that is plus 27,000 plus 27,000. So it is 5,60,500. Okay, so total will come to 5,60,500. So if you see, there is a question regarding that value of inward supply of solar panel under section 15, 5,60,500. Okay, super. Right, coming to the next paragraph. Apart from the above, Process Limited received 2 lakh as an advance payment on 2nd Jan 2025 from Mr. Mohan, a customer, with respect to the taxable supply of goods of 10 lakh. The company removed the goods on 9th January and issued invoice on 10th January. Goods were received by Mohan on 11th January, and Mr. Mohan has made the balance payment 8 lakhs on 20th Jan. All these things through NEFT. If you remember, there is a time of supply question for this particular aspect. Okay, so this is, first of all, we should understand goods. For goods, even if it is advance received, sir, that is not immediately taxable as per section 12 subsection 2. It is ADOI or DDOI, actual date of invoice or due date of invoice, whichever is earlier. So here, if you see, actual date of invoice is 10th Jan, and due date of invoice is when the goods removal movement is involved on the date of removal, that is the due date. So 9th January is the due date. So due date 9th January, actual date 10th January. So for entire 10 lakhs, 9th Jan will be the time of supply. 9th Jan will be the time of supply. 9th Jan for both 2 lakh and 8 lakh. Yes, option B is the correct answer. Okay, super. Next. See, this is the advantage first when you read MCQs, because you know the questions, and when you are reading the case study, obviously you'll understand what to pick actually. Okay. So next, in addition to the above, due to oversight, the company failed to disclose a self-assessed outward supply of 2 lakh rupees while filing GSTR 3B. for the month of August. See, understand, due to oversight, company failed to disclose a self-assessed outward supply. That means they have failed to disclose an invoice of 2 lakh rupees, while GSTR 3B for the month August, filing August month 3B, balance ITC for the month August 2024 in e-credit ledger is 10,000 under each head CGST and SGST, which remains till the date of deposit of tax. Company filed the return for the month of August on due date 20th September. The company disclosed this supply, this particular 2 lakh worth of supply, they have disclosed in Jan 3B and paid the net tax after setting off ITC, all these things with interest in 3B on 18th February. First of all, understand, there is a question regarding interest, amount of total interest which has to be paid. Okay, now first of all, understand, 2 lakh is the value of supply, 2 lakh is not tax. And tax rates they have given here clearly, sir. If you finish in this case study, they have told taxes to be charged at 9% each, intrastate supply, CGST, SGST. So please understand, on 2 lakhs, because the question is they are asking both CGST, SGST together interest, sir, on 2 lakh, tax is 36,000 only. You should not calculate interest on 2 lakhs. This 36,000, and when you have missed out any invoice as per section 50, sir, delay in payment of tax because of delay in filing return, then on net liability, that means gross liability minus credit ledger balance minus cash ledger balance, if anything is there, on that you will pay interest. But here you should pay interest on entire tax amount, because you have completely missed out an invoice, filed that month return, and later on realized it and paying it later. So here GST liability will come on gross liability, interest will come on gross liability, not on the net liability. So the ITC information given here is just to confuse you, it is irrelevant for the calculation. Okay, so on entire 36,000 interest will come, and interest will come for how many days? This is August month liability, that means 20th September you should have done, 20th September you have not done. So in September, out of 30 days, 10 days are still remaining. Okay, next October, November, December, Jan, Feb 18th they are paying this. So if you take 1, 2, 3 plus 8, 11 days. Okay, 1, 2, 3, so 15. Okay, so it is 3, 4, so 12, 15. 151 days delay, my dear friends, if you have understood. So the answer is, sir, 36,000 into 18% into 151 divided by 365. So 36,000 into 18% into 151 divided by 365. So it is 2680. 2680 is the answer. 1340 each. So this is the answer. Hope it is clear for you. Okay, fine. Next. Everything covered? No, there is something regarding penalty also. Right. So we are done with this particular information. Next, proper officer issued show cause notice on 25th Feb 2025 demanding the penalty for late deposit of tax on escaped supply relating to the month of 2024, August 2024. So officer has issued show cause notice on 25th Feb, now demanding the penalty for late deposit of tax. Now there is a question here. What is the amount of total penalty which could be leviable under section 74A with respect to payment of tax on delayed disclosure of outward supply, total for both the CGST and SGST? So if you remember here, sir, section 74A subsection 5 talks about penalty where there is fraudulent intention and no fraudulent intention. Fraudulent intention, 100% of tax will be paid as penalty. If there is no intention to fraud or willful misstatement, all these things, 10% of tax or 20,000, whichever is higher. Here, what is the tax amount? The tax amount itself is 36,000. Correct? In that 10% is how much? 3,600 or 20,000, whichever is higher. And understand, they have asked here penalty total for both the CGST and SGST. That means your answer should not be generally 10,000 plus 10,000, CGST 10,000, SGST 10,000. So your answer should be total 20,000. Your answer should not be 10,000 C. So option is A. The answer is A. So with this, we are done with these questions. 7, 8, 9, we are done. 10, 11, 12. Yes, we are done. Now going into 13th MCQ. Sir, this is an independent MCQ. Where the interesting point here is, see, Messrs. Ocean and Waves Private Limited imported a consignment of goods from France through sea. The value of said consignment is 800 lakhs. Total customs duty payable is 180 lakhs. Here, the catch is company filed a bill of entry for home consumption, but the goods got deteriorated. This is very, very important, my dear friends. After unloading and after examination, not before examination, after examination. See, the benefit of reducing the customs duty, that remission is available only when the goods are damaged before examination. Okay, even it is before unloading or during unloading, after unloading, all this fine, but it should be before examination. But here examination is over. So what they have understood after examination, sir, they have understood goods got deteriorated. After examination it got deteriorated, but before clearance for home consumption, the value of deteriorated goods comes down to 200 lakhs. But still, please understand, the same is agreed by the proper officer also, but the amount of total customs duty payable at the time of clearance of goods will be the entire 180 lakhs, not proportionately 45 lakhs. No, because here goods are deteriorated after examination, not before examination. That is what very, very important point here. So the next MCQ, if you see the 14th one, Laksh imported a machine from China 100 lakhs in May 2024 on payment of all duties of customs. The said machine was exported, sent back to the supplier for repairs in August and re-imported without any remanufacturing, reprocessing, all these things in March 2024. After the repairs as per the terms of warranty. The repairs were carried out free of cost, but 50% of the cost of material was to be borne by Mr. Lakshay. Following details available. Okay, fair cost of repairs excluding cost of material is 4 lakh. Cost of material used 5 lakhs. In the 2,50,000 only that fellow will bear. Actual insurance and freight to send it to the supplier and also for re-importation is 1 lakh, 1,20,000. Value for the purpose of levy of customs duty for such repairs under section 20. In section 20 they say if the goods are exported for repairs and then they are re-imported, please understand the value for levying customs duty is nothing but, first of all, the fair cost whatever is there for repair, that will be added. Okay, this 4 lakhs will be added. And the interesting part is the cost of material. The cost of the material, whether this fellow has borne or not, that doesn't matter. So here 50% of the cost borne by him or 100% of the cost borne by him or nothing has been borne by him, it doesn't matter. So total the cost of material used will be taken into picture, and the freight and insurance both ways, okay, for sending and bringing it back, both will be added. So it is like 4 lakh plus 5 lakh, 9 lakh, 10 lakh and 11 lakh, 20,000. Option A is the correct answer. Okay, that is what the point. And now coming to the last MCQ here. So if you see this question, it is regarding Messrs. Hope and Win Medicare Clinic is a multi-specialty hospital located at Chennai, Tamil Nadu. It has provided the following services to one of its patients. Okay. Air ambulance service to transport critically ill patient, charge 80,000. Ambulance services, even air ambulance service is exempt under GST. Services by way of providing general wardroom having room charges exceeding 7,500 per day to the patient receiving health services, and total fees of the room services is 1,72,000 excluding taxes. Total value of taxable outward supply provided to the patient. As you know, this is exempt and this is taxable. Sir, 1,72,500 will be the answer. See, you know, for room services, 5,000 per day, if it is exceeding, it is fully taxable. Okay. So that is what the point. Okay. But that is not applicable for ICU, NICU, ICCU, all these things. Hope you remember that. So with this, we are done with MCQs part. Let us move on to the descriptive part. So now guys, coming to the descriptive part, the first question, you know, the compulsory question 40 marks, I have analyzed it and kept it so properly, and I have written, solved it, kept it in the formats, all these things. So that way we can just quickly finish this 14 mark question. See, first of all, in any 14 mark question, you are seeing what is a net GST payable. For net GST payable, yes, in every video of mine, whether it is RTP, MTP, I always tell 3 steps. Step 1, calculate gross GST liability. Step 2, calculate ITC. Step 3, set off. For step 1 and step 2, see, for calculating gross GST liability, you should decode the sales information. For ITC, you should decode the purchases information. And finally, set off, you know, obvious. So when you're decoding the sales information and purchase information, you should be careful whether it is intrastate or interstate, whether it is taxable or exempt, whether it is RCM or FCM. Like that, if you have decoded properly, and in the question itself, like while in the exam also, take some pencil and eraser, make sure you're writing all these things in the question itself, so that while posting the information in step 1 and step 2, it will be very easy for you, right? So here, first, as usual, you know, who is the person we will identify. So this is the company, Shantanu Limited. Where they are registered? Kerala. and for which month this is regarding Jan month, we have understood. And here one another interesting information is, this is engaged in providing a bouquet of goods and services other than renting of cars. That means something related to renting of cars there might be in sale or purchase. So let us see that. Now sales information, if you see the first point, distributed 1000 free gifts which are nothing but electronic items worth 5000 each, purchased from unregistered local vendors. First thing, purchased from unregistered local vendors means he would have not charged GST, so you need not worry about ITC. Okay, this is first clarity. Next one, to whom they have gifted? They have gifted to customers within Kerala in the month of Jan to promote sales. And you know, because these are not related persons, not distinct persons, no consideration, no supply, schedule 1 will not trigger. So I am writing here, no consideration, no supply. So no GST implication. Super. Next, supplies of consignment of goods in the territorial waters to Indrajit Enterprises, and the said territorial waters is located at 11 nautical miles from baseline of Kerala, 12 nautical miles from Tamil Nadu. And this is mainly regarding section 10 of IGST Act, where they are testing about is the place of supply, location of supply or place of supply falling in territorial waters. What is the place of supply? The state which is very closest to that. Okay, so 11 nautical miles Kerala, so place of supply is Kerala. So on this 6 lakhs you will charge CGST, SGST. So I have written here C plus S, so that when posting it will be easy for you. Next one, advance received during the month for future intrastate, they only gave intrastate taxable supplies is 7 lakh, but they told 2,10,000 is related to goods and balance related to services. You know, for advances received for goods, time of supply still will be actual date of invoice or due date of invoice, so time of supply will not fall in the month of January, so it will come in future. So we will not charge any tax here, we will not pay any tax here on the 2,10,000, but balance 4,90,000 is related to services, where the time of supply is yes, date of payment in the month of Jan itself it is falling, so we have to pay GST. So I have divided here 2,10,000 no GST, 4,90,000 CGST plus SGST. Like that. See what I am trying to teach you here. First of all, understand, while reading the question itself, make sure you dissect the information and properly present that, so that while solving the answer it will be literally easy for you. Next, provided pure labor services for construction of single commercial unit. And understand, sir, in exemptions we have seen exemption for pure labor contract related to single residential unit. Here it is single commercial unit. They also told not forming part of any residential complex. It is not forming part of residential complex, but exemption is only for residential unit, for not for commercial unit. So exemption only to residential units. So on 15 lakh, yes, tax will come, and this is regarding Mumbai. So place of supply, sir, this is related to immovable property services provided. So place of supply will be the location of immovable property. So 15 lakh IGST will be the concept. Okay. So that is what the point here. So IGST will come. Next, inward supplies, that means purchases. See now what I have did here, sir, in step 1 itself, step 1, calculate gross GST liability. So open the format like this: particulars, amount, IGST, CGST, SGST. In ICA material for suggested answers, they will go with CGST, SGST, IGST, but I will go with IGST, CGST, SGST, because for set of IGST, ITC, you should make 0 first. So I follow this format. If you are following me regularly, you know all these things actually, how I proceed, etc. So particulars, 1000 free gifts. In the particulars itself, you write down the explanation what is related to that, and then fill the amounts. Okay, because it is nil, no GST, I have not posted anything. And Indrajit Enterprises, write down place of supply regarding Kerala, all that explanation. In the particulars itself, you give your reasoning. Don't take any separate working notes, all these things at all. In the particulars itself, you give reasoning. Amount column, I have written 6 lakh, and there itself I wrote below that 9% plus 9%, so that examiner will have a clarity. Yes, this fellow is charging CGST, SGST at 9%, 9% like that. Okay, so that way I have posted these numbers. 54,000, advances received 4,90,000. Here you should write the reasoning. Reasoning for 2,10,000, time of supply will not fall in the month of January because it is related to goods, but for services, advances received are immediately taxable. Like that, you should write down the reasoning, all these things, and I have posted. So this is output tax. Pure labor contract, commercial unit, here you should write down exemption is available only for residential unit, all that, and IGST comes into picture because the place of supply is in Mumbai. So 15 lakh, 18%, 2,70,000, CGST, SGST nil. So that way I have got total gross GST liability 2,70,000 IGST, 98,100, 98,100 CGST and SGST. I have got it. Now, so let us decode the information of purchases. Purchases information, if you see, monthly rent paid to Kerala state government. This fellow is also from Kerala and he is also paying to Kerala state government. Rent, sir, recipient is registered person here. So central government, state government, union territory, all these things, you know. So RCM will come into picture, but you can take ITC. That is important thing here, sir. On 6 lakh CGST, SGST you will pay, and ITC you can take, but this is coming under RCM. So note it down RCM and leave it like that. Next, purchased raw material from Srinivas Steels Limited, registered in state of Andhra Pradesh. Andhra Pradesh means IGST. This fellow is in Kerala. So 15 lakh purchases. You can take ITC. Next, purchased a new truck from dealer in Kochi, Kerala for transportation of materials. So truck purchased CGST, SGST. This is not car. All these things less than or equal to 13 seating capacity. So this is goods vehicle. So you can take ITC. Yes, CGST, SGST, and you can take ITC. Now, guys, this is the very important adjustment which I have seen in this entire question. Okay, what is that? Now, in the additional information, if you see, in the additional information, during the course of arranging and filing documents, the accountant Shantanu Limited observed that an invoice of 96,000 excluding GST dated 2nd December of last year. This is Jan. That means last month only. Last month is obviously in last year. Was omitted to be recorded in the books of accounts, and no payment was made against the same till the end of January. That means till January payment was not made. And the very important point is here the invoice is issued by Mr. Deepak of Kerala, from whom Shantanu Limited have taken cars on rent, where invoice included cost of fuel. And you know, renting of cars by Mr. Deepak, a non-body corporate, to Shantanu Limited, which is a body corporate, where cost of the fuel is included, is an RCM entry. And here the very interesting thing is, sir, this is an RCM entry first of all, and taking cars on rent, you cannot take ITC unless you are in the same line of business. This is not in the same line of business, which we have already read in the beginning of the question. So Shantanu Limited cannot take ITC because renting of cars, taking the cars on rent cannot be taken as ITC unless you are in the similar line of business. So Shantanu Limited first thing cannot take ITC, and next one, this is under RCM. These things are fine. But the very interesting point is the time of supply. So this is an RCM transaction, and 13 subsection 3 will come into picture. And the important point is invoice is issued by the supplier. Mr. Deepak has issued the invoice. So what is the time of supply as per section 13 subsection 3? Date of payment or 61st day from date of invoice, whichever is earlier. Payment is not done till this month and 31st January, and 61st day from invoice. If you see, 61st day from actual date of invoice will come on 1st Feb. That means it will come in which month? Next month. But this is related to Jan month. So the very important thing, sir, for this, you don't have any treatment in this month. There is no GST liability in this month. Are you understanding the point? That is the tricky adjustment. That means in this entry, you should think about RCM, you think about ITC, and you will forget about time of supply. So you should be careful, sir. Here, time of supply adjustment also you should take care. That is what the point. So here for this month, no adjustments for this. That reasoning you should write in the answer. That is what important. Next, availed services of arbitral tribunal in Kannur, Kerala. Kannur, I was going to Kannur in 2018-19 for taking classes. Nice experience. Fine. Okay. Kannur of Kerala, 7 lakhs to settle a case relating to Companies Act. Okay. So arbitral tribunal, yes. Purchases, inward supplies, you can take ITC. But this is RCM. That also you should remember. You can take ITC, and of course it is an RCM payment, RCM adjustment you should do. Okay. Next, company claimed depreciation under income tax on the new truck purchased, including all applicable taxes, is important. That means the truck, whatever we have written here, yes, you can take ITC. Sir, for the truck, you cannot take ITC, sir. ITC will not come into picture. Yes. Okay. That reasoning also you should write actually in the answer. Next, Srinivas Steels Limited is mandatorily required to issue in e-invoice. However, it did not issue e-invoice with invoice reference number. So without invoice reference number, e-invoice is not valid. So obviously you cannot take ITC on this also. The invoice was reflected in 2B, but even though it is reflected in 2B, sir, without IRN, e-invoice is not a valid invoice, sir. So you cannot take ITC. So here for raw material purchased from Srinivas Limited also, you cannot take ITC. Okay, super. Now, turnover of Shantanu Limited for previous financial year is 180 lakhs. You will be feeling why this information is given. Because, sir, services of arbitral tribunal to a business entity whose aggregate turnover not exceeding the threshold limit for registration, exempt under GST, you know, exemptions are there. So that exemption is not available for this fellow. That is what they are trying to tell. Okay. If they have given here, instead of 180 lakhs, if they have given here 18 lakhs, what would have happened? This would have been exempt under GST. Okay, no ITC, no tax treatment, no RCM, nothing. Okay, so that way you be careful. Next, they have given rates 9%, 9%, 18%. Okay, fine. So now, sir, second step, calculation of ITC. Yes, we have decoded the information and I have made it ready. Sir, rent, yes, you can take ITC. For raw material, you cannot take ITC because Srinivas Limited. Here, you should write down the reasoning, my dear friends, because e-invoice doesn't have IRN. Without IRN, e-invoice is not a valid invoice, so no ITC. Truck, because depreciation has been claimed, they cannot take ITC. Yes. Cars on rent. Sir, cars on rent, this is not a transaction which is like eligible for ITC because it is blocked, and regarding that you should also write, sir, tax treatment will not come in this particular month because of time of supply reasons. Next, arbitral tribunal, yes, you can write, sir, this is taken in the course of business and of course it is taxable and RCM will come, all these things, explanation you write. So total ITC, if you see, you will get CGST, SGST 1,17,000, 1,17,000, and finally you go for the set off. When you are going for the set off, 2,70,000, 98,100, 98,100 is their output tax. ITC, sir, IGST you don't have any ITC if you see. So already it is 0, so no need to worry. So we will use CGST for CGST, SGST for SGST. CGST balance 1,17,000, 1,17,000, 98,000, 98,100, straight away you will set off. Still there will be balance available. So that can be used for IGST. So CGST 18,900 balance and SGST 18,900 balance will be used to IGST payable. And if you see, net GST payable will be IGST 2,32,200, CGST, SGST 00. But sir, final step in RCM cases, you can take ITC, provided other conditions are satisfied. And when you calculate net GST payable in cash, add this RCM liability. So there are two RCM liabilities, rent and arbitral tribunal. So after adding them, the net GST payable in cash, net minimum GST payable in cash is this: 2,32,200 IGST, 1,17,000, 1,17,000 CGST and SGST respectively. Okay, so this way we have finished discussing 14-mark question just in 5 minutes. Okay, 14-mark question in 5 minutes. So that way you can just manage the answer. So please follow these methods, follow the procedures. Literally that 14-mark will be very easy for you. Okay. So the next question is regarding determining the place of supply for the following independent cases. Simple one. SRT Events, event management company at Kolkata, organizes two award functions of Mohini Jewelers of Chennai registered at New Delhi and Singapore. Sir, once the recipient is registered organizing the event, obviously the place of supply is where the recipient is registered. So that is Chennai. Tamil Nadu is the place of supply for both the cases. Next, Joyful Planners, Bengaluru, Karnataka, hired by Dr. Trustee, unregistered person based in Kochi, Kerala, to plan and organize her daughter's wedding. So same thing, organizing the event, but for recipient, unregistered means where the event is actually held. But if it is outside India, then the location of the recipient. But here it is in India, so the place of supply will be Mumbai, Maharashtra. In this case, Chennai, Tamil Nadu. In this case, Mumbai, Maharashtra. Next, Emric Private Limited imports a machine from Japan for being installed in its factory at New Delhi. To install such machine, Emric Private Limited takes service of an engineer who comes to India from Japan. See, generally when the physical presence is required for providing the services, all these things, yes, where the services are actually performed is what? The place of supply. So the New Delhi will be the place of supply in this case. Next, Ranjan Architect provides professional services to George of New York in relation to immovable property located in Pune. So the immovable property is located in Pune. Pune will be the place of supply. You can write down the reasonings, all these things. Next, Mr. Jani, unregistered person based in New Delhi, hires a yacht from a company based in London, UK for 20 days. So when you are taking on hire this means of transportation, that means the vehicles, conveyances, all these things, including yachts, other than vessels and aircrafts, up to 1 month, you know the provision, I guess. You remember the provision, I guess. So for that, the place of supply will be the location of the supplier. So the supplier is located in London, UK. That will be the place of supply. So with this, we are done with this 10-mark question, place of supply. Next, from customs, they have given a question here regarding the valuation. Obviously, one such question will always be there in exam also. So you have to calculate the value, I guess, here. Right. So let us look at this question. So in this question, Mr. Marsh imported certain goods from related person, Mr. Rehan of US, and transaction value has been rejected because related person rejected. Rule 4 and 5 of customs valuation rules, determination of value of imported goods rules, are found inapplicable because there are no similar or identical goods imported in India. And Mr. Marsh furnishes cost related data of imports and requests the customs authorities to determine the value accordingly as per Rule 8, and the relevant data has been given here. cost of materials, fabrication charges, other charges, other indirect cost, freight, loading, net profit, air freight, insurance, exchange rate, all these things. Customs authorities are of the opinion that since the value as per Rule 7 can be determined at 4 lakhs, there is no need to apply Rule 8 of the customs valuation rules. Can the request of Mr. March be legally acceptable? If so, compute the assessable value under Customs Act 1962. See, as clearly they have given, sir, this fellow is like between related person, they are rejecting the transaction value, all that, and Rule 4-5 also not applicable because of no similar or identical goods available. And Rule 6 says you can go with Rule 7 or 8 and it can also be reversed. And it is like, see, first you should follow Rule 7 deductive method and Rule 8 computed method based on cost. But when the importer is requesting the department and if the proper officer approves that, then that can be done in a way. First you can follow Rule 8 itself instead of Rule 7. So here in this question, whether it is legally acceptable, if you ask, yes sir, it is legally acceptable. The request of Mr. Marsh, he can request, first let us go with Rule 8 itself based on cost, but for that the officer should accept. And if the officer accept, then what is the assessable value? Assessable value is nothing but based on the cost. Here if you see, so the cost of raw material is $2,000 and next fabrication charges we should take, yes, $1,000, because it is dollars everywhere. I am not going to write dollars again and again. So 1,000. Next other expenses 400. Next other indirect cost involved 250. So this is like at the factory gate. Factory gate the cost is, if you see, 3,000, 3,650, 3,650. Okay, and they have added, what is this one? Freight and loading. Freight and loading 250 and 100. So this is FOB value. FOB value is 4,000. Okay, FOB value is 4,000. You have got entire cost, but there is a profit, correct? Profit is 20% on FOB. That is $1,000. Now for this you add again insurance. Insurance is $50 plus freight. Freight is $1,500. Guys, understand, this is the important adjustment here in this particular question. Sir, 1,500 when it is freight, because it is air freight, you know, air freight should be restricted only for maximum 20% of FOB. Here FOB itself is 4,000 now. 20% of FOB is just $1,000. So it is $1,000 only. But when 20% of FOB is taken as freight, sir, that means this 20% should be calculated from the factory gate till the importation port. That means this 20% includes transportation from factory gate to exporters port, loading, unloading, everything. Okay, so already you have added here freight of $250, loading $100, but this 20%, that is the $1,000, includes this 250 and 100. So what we should do, we should remove that 350 now. We should remove that $350 now. So if you see, hope you have understood, when we are taking freight at 20% maximum, sir, that means that 20% is nothing but the freight, all the expenses from the factory gate till the importer's port. Okay, so from the factory gate, again this till exporter port and loading, all these things are there. No, that should not be considered now, because we have already added, we are removing that. So 4,000 plus 1,000 plus 50 plus 1,000 minus 350. So it is $5,700 into, they have given the exchange rate 70 rupees per dollar. 70 rupees per dollar. So it is like into 70 will give you 3,99,000. This is the answer. Hope it is clear for you. So now in the next question, Vishesh Private Limited of Chennai, Tamil Nadu, exclusively manufactures and sells product O2C which is exempt from GST while notification with certain taxable supplies. Okay, company sells OT. See, first of all, understand, this fellow is from a company from Tamil Nadu, selling exempt one, and the company sells product O2C within Tamil Nadu and it is registered under GST. This is again another important one, registered under GST under regular scheme. Further, all inward supplies of company are taxable under forward charge. The company expects the sales to grow in the current year. Owing to the growing demand for the product, the company decided to increase its production capacity and purchased additional machinery exclusively used for manufacturing O2C on 1st August. 1st August they have purchased. The purchase price is 45 lakhs excluding taxes. Now what happened? However, with effect from 1st December, exemption notification available on O2C was withdrawn by central government and 12% will be imposed. Question is, can Vishesh Private Limited take ITC on additional machinery purchased, which is exclusively used for manufacturing O2C? If yes, how much credit can be availed? Advise Vishesh Private Limited on the above issue with reference to the provisions of GST law. Now, please understand this is, if you remember, based on section 18 subsection 1 clause D, where your exempt supply becomes taxable supply, and if you are already registered, you can take ITC on inputs and capital goods lying in stock which are not more than 1 year old. Here they did not speak anything except this machinery. So this machinery they have purchased for 45 lakhs. On that 18% GST they have paid, that is 8 lakh 10,000. Okay, this was done on 1st August and exemption is withdrawn from 1st December. 1st December. See, we have to see how many quarters they have used. They have used this from the quarter July to September quarter, that is Q2, till October to December quarter this was used. So this has been used for Q2 and Q3. That means 2 quarters they have used. Per quarter 5% you will reduce. So minus 10%. Each quarter 5% you have to reduce. So 8.1 minus 10% will give you 7.29, 7,29,000 ITC you can avail. Okay, simple one. So this is what for 5 marks. Okay, fine, super. Next, let us move on to the next one. The next one is Kannaya Lal checked in at Royal Tourist Lodge in Madurai on 15th March. The room rent was 900 per day. Okay, she checked out. Again, see, they gave name Kannaya Lal and they are using the word she. Fine. And on 17th March, checked out. So check-in was on 15th March, checkout 17th March. Okay, payment was received on the same day via check at the time of checking out and entered in the books on the same day. The lodge decided to issue invoice on the same date when the amount get credited. Okay, the lodging of hotel rooms was exempted up to 1000 rupees earlier, became chargeable to tax from 18th March. Under GST law, determine time of supply and taxability of these services in the hands of all these things. If the check gets credited on 20th March, assume all the above days covered are working days. As you know, here this is concept of time of supply. Time of supply when there is change in rate of tax. Section 14 will come into picture. Okay, now please understand. So here, when there is change, 18th March, there is change in tax. Okay, and we have to see when the service is completed. She is doing the checkout on 17th March. So you should always see when the date of completion of service is there. This is 17th March. That means before the change. Now we should see before the change, before 18th March, if payment is there, then that will be the time of supply. Or no sir, payment is not there but invoice is there, then that will be the time of supply. No sir, both payment and invoice are coming after 18th March, after the change. Then whichever is earlier, payment or invoice. Date of completion of service will never be time of supply according to this section 14. Now if you see invoice date, if you see, it is on 20th March because that is the date when the amount got credited. So invoice is on 20th March. Okay, after the change. After the change. Let us see payment. Payment, if you see, check is given, that is date of payment is nothing but when it is entered or credited, whichever is earlier. It is entered on 17th March, credited on 20th March. And one more thing, sir, when there is a change in rate, from that within 4 working days, if the payment has got credited, then we will take date of entry or credit, whichever is earlier. Here 18th March change is happening, 20th March it is getting credited. So obviously you will follow the same provision. Date of payment means the date of entry or date of credit, whichever is earlier. No sir, if it has credited after 4 working days, then date of credit only will be taken as date of payment. But here because it is credited within 4 working days, you will take date of entry or date of credit, whichever is earlier. So entry is earlier. Entry is on 17th March. So date of payment is treated as 17th March, that will be taken as time of supply. And at that point of time, the GST was exempt on this room services, renting the room services. Now, this service is fully exempt under GST. Okay, that is what the answer for you, right? So, that is point number B, question number B. Right, the next one, if you see, after visiting USA for a month, Messrs. and Mr. Chauhan, Indian residents aged 40 and 45 years respectively, brought to India a laptop computer worth 80,000, used personal effects 90,000, and personal computer 52,000. What is the customs duty payable? Ignore agriculture. So you should go with the baggage rules here. And you know, as per the baggage rules, one laptop is exempt for each person. So there are two members coming. So they got only one laptop exempt, and used personal effects again exempt. And per person, you know, general duty free allowance 50,000 is there, and this is per person, and you cannot club them together. And here you cannot say, sir, two of them are coming, let us take it 1 lakh. No, not like that, per person. So personal computer, because it is taxable, so 50,000 they will take the relaxation. On balance 2,000 they will pay customs duty at 38.5%. Okay, 2,000 into 38.5%, so 770 rupees they will be liable to pay. That is what the answer, right? Let us move on to the next question, question number 4. So in this question, question number 4, Rise the Operators Limited is registered under GST in the state of Karnataka as an e-commerce operator. So this is a story regarding e-commerce operator, and it owns and operates a web portal which supplies various goods and services on behalf of various sellers, service providers to its ultimate customers. That means this is acting as an e-commerce operator where it is operating on its own, a web portal, all these things. So details of such supplies undertaken in the month of October. If you see, sale of goods worth 1,47,500 including GST by ABC Limited, registered supplier of Rajasthan, to BMC Limited of Gujarat. Also goods worth taxable 1,40,000 by ABC Limited, Rajasthan, to BMC in the month of September were returned back. Right. Here, if you understood, the interesting thing is, sir, 147,500 is the sales, and sales return is 1,40,000. But one important thing what you have to observe here is 1,47,500 including GST they gave, but 1,40,000 they did not mention anything. And at the end of the question, they have given all the figures given above are exclusive of GST except wherever specified separately. That means, they understand, this 147,500 is including GST, this is excluding GST. So if you take the GST rates what they have given, 9%, 9%, 18%, that way. If you take here, that 147,500 is including 18% GST. So into 100 divided by 118, if you put 120,500, sorry, 1,25,000, and 1,40,000 is sales return. That means sales return are more. So here TCS will be nil. This question is regarding TCS only for your information. Next, you should calculate the amount of TCS to be collected, okay, for the month of October. Next, value of services provided from 21st October to 30th October by way of transportation of passengers by motor vehicles by Suzanne Limited, registered under GST in Karnataka, to GN Limited. That means Suzanne Limited is providing services to GN Limited using this e-commerce operator. 9 subsection 5 entry, you know, when there is 9 subsection 5 services, there is no TCS concept. How much value? 5,50,000. But this includes 1,50,000 against transportation services by omnibus. You know, transportation by omnibus by a company, supplier is liable to pay GST, not e-commerce operator. So for this 1,50,000, because supplier is liable to pay GST, so TCS will come into picture, sir, for this 1,50,000 into 0.5%. That will be the TCS. Okay. So here, if you see, Suzanne Limited is also from Karnataka, Zian Limited is also from Karnataka. So it will be CGST and SGST. So it is 0.25%, 0.25%. So 1,50,000 into 0.25%. 0.25%. 375 rupees plus 375 rupees will be the TCS. Simple one. Next. The next one is Mrs. Sachi of Mumbai books a room 3 days and 2 nights in Ashoka Palace, Jodhpur, Rajasthan through Mahishmati Resorts Limited also an e-commerce operator registered under GST in Karnataka. MRL is integrated with ROL, who has an agreement with Ashoka Palace. So Ashoka Palace is registered under GST in Rajasthan and raises invoice for 1,50,000 to Mr. Sachi, whatever it is, and receives 1,45,000 from ROL for the same. Now see, for example, here what is happening now. This girl Sachi is booking the room using MRL using ROL. And who is the ultimate supplier? Supplier is Ashoka Palace. Okay. So here, this fellow is also e-commerce operator. This fellow is also e-commerce operator. But sir, the supply is made through the e-commerce operator, correct? Made through the e-commerce operator. Who will make payment to the supplier? Who will make payment to the supplier? ROL will make payment to the supplier. So obviously, sir, TCS will be deducted by ROL on what invoice value? 1,50,000. Okay. This Ashoka will raise invoice to Sachi through ROL only for 1,50,000. Okay. So on 1,50,000, 0.25, is it 0.2525, or this hotel is in Ashoka Palace, Rajasthan. This fellow is from Karnataka. So it is 0.5% IGST will come into picture. For 1 second now. Sorry. This is accommodation services. Yes, accommodation services. Supplier is Ashoka Palace. Place of supply is location of removable property. Yes, this is also Rajasthan only. Place of supply also. So supplier is in Rajasthan. Ashoka Palace is in Rajasthan. Place of supply is also Rajasthan. So 0.25%, 0.25%. Again, 1,50,000. 375 plus 375. Sorry, extremely sorry. This is also interest. The only thing, okay, let us not worry about the calculation errors. The only thing you should be careful here, sir, invoice is raised for 1,50,000 to Miss Sachi, and how much they are receiving from ROL, that's a different story. Because of their arrangement, Ashoka will receive 1,45,000 only from ROL. That means that balance 5,000 is commission for ROL. Please understand that. So how much is the invoice raised by Ashoka Palace to Sachi? 1,50,000. On that, TCS will come into picture. Am I clear? Hope it is clear. So let us proceed. So this is what the concept. So with this, we are done with this question. Okay. So if you look at the next question, Elegant Cosmetics Limited has multiple wholesale outlets of cosmetic products in Mumbai, Maharashtra. It receives an order for cosmetics 1,20,000 inclusive of GST 18%. Okay, from Rajendra, owner of retail cosmetic store in Delhi. Okay. While checking the stock, it is found that order worth 55,000 can be fulfilled from company's Dadar, Mumbai store, and remaining goods for 65,000 can be sent from Malad, Mumbai store. But both the stores are instructed to issue separate invoices for goods sent to Rajendra. The goods are transported to Rajendra in Delhi in a single conveyance owned by Paridhi Transporters. You are required to advise Elegant Cosmetics with regard to issuance of e-way bills. Okay. And if you see in this, see, even though it is a single order, you have raised two invoices. E-way bill is based on the invoices, number of invoices, not based on how many conveyances you are using for transportation, not based upon how many orders it is. So here, because it is two invoices and both are exceeding, if you see, one is 55,000, the other is 65,000. Both are exceeding 50,000 in consignment value, that is including taxes. So two e-way bills will come into picture. So here the answer is regarding two e-way bills. Okay. The next one, if you see the next one. So the next one, if you see, Mr. Jatin, an importer, had made provisional payment of customs duty of 2 lakhs under Section 18 of Customs Act on 17th July 2024, along with a security of 1 lakh towards the provisional release of goods. So he has paid duty 2 lakhs, and security here for 1 lakh. Final assessment was completed on 15th October and duty assessed was 50,000. Refund order of 50,000. Also order for release of security also issued on the same day. So 15th October assessment is everything over and they have decided your liability is only 50,000 and balance 50,000 will be refunded to you, and 1 lakh whatever the security has been given, that will be released. Now this fellow is filing, Jatin filed the refund application on 20th October with necessary documents, and later on they have found some deficiencies in the application, and this fellow has submitted the required additional documents and proper officer also acknowledged it on 5th November. Refund was paid to him on 25th March 2025. Now you are required to compute interest receivable by Mr. Jatin under Section 18 of Customs Act 1962 on amount of duty and amount of security, if any. Calculate interest to the nearest 1 rupee and assume 360 days in the year. Okay, so here we have to calculate the interest on that refund amount. Okay. So if you look at the interest now, see, generally when case of provisional assessment is finalized and the refund shall be granted within 3 months from the date of final assessment. If not done, then the interest shall be calculated at 6%, you know that. So here the final assessment has been done, completed on 15th October. So if you take 3 months, 15th October, November, December, Jan. So 15th Jan, by that you should have given the refund. But the refund was given when? The refund was paid to him on 25th March. So if you take from 15th Jan, so in Jan balance 16 days are there. Feb they said take it 366 days, the leap year effect. Sorry, it is like 1 second. Feb 2025. In 2025 there is only 28 days. Next March, you should take March 25 days. So totally it is 8 plus 6, 14, 19. It is 69 days. Is it so? As they said, take leap year. Yes, we should take here 29. Mm, 70 days. So I don't know what is the logic of asking to take it here, leave here. Fine, still okay. So there are already too many mistakes in this MTP questions. We understand that. So the amount is 50,000. 50,000 into 70 divided by 366 into 6%. What is that? 50,000 into 6% into 70 divided by 366. It is 573 rupees, 573.77. You can take 574 nearest to rupee as the answer. Okay, rounded off. So that is what the concept. Hope it is clear, right? Any calculation errors, you just check that ma is the respect to number of days. 1 second. Fine, yes, calculation mistakes, nothing are there. I seriously don't take the logic of taking 2025 as leap year here, but institute has taken that way. Let us not worry about that. Now, coming to the next question, question number 5. So, in this question, Shubham intends to start selling certain goods in Delhi. However, he is not able to determine the classification and the place of supply. His tax advisor is advising, right, go and apply for advanced ruling in respect of these issues so that it will bring certainty, transparency in these issues and also will avoid litigation. Like that, his tax advisor is advising. Sorry, Shubham is agreeing, but he has some apprehensions here. So, with the information given above, you are required to advise Shubham with respect to the following. Number one is tax advisor asks Shubham to get registered under GST law before applying for advance ruling, as only a registered person can apply for the same. Whether Shubham needs to get registered, whether any person registered or intended to get registered, so can apply for advance ruling. It is not like you are definitely to be a registered person, all that is not required. So registration is not mandatory here. Hope that is clear for you. Next. The next one is Shubham is apprehensive that if at all advance ruling is permitted to be sought, he has to seek it every year. Unless the law changes, once the advance ruling is given, it will be valid for lifetime. So yes, you know that is not correct. Next, tax advisor is of the view that order of appellate authority for advance ruling is final and is not appealable. Whether the tax advisor's view is correct, the applicant can appeal against it, or even the jurisdictional officer is not okay with that, then he can also appeal it. Correct? So that is wrong again. Next. Guys, once I discuss all these things, you just read these answers for your better clarity to know the sentence formation, all these things. Next, Goldie, Shubham's friend, is a supplier. That fellow also doing the same business or going to do the same business. Whatever this fellow Shubham gets the order, the same the same order I will also follow, like that he is feeling. Whether he can do so, no, absolutely no. Sir, this sorry, that when the application is made for in front of authority for advanced ruling, it is applicant specific and it is binding only on that particular concerned jurisdictional officer, and with respect to that applicant, everybody cannot do this, correct? Everybody cannot take the same view what has been given by authority for advanced ruling in a particular case. That everybody cannot follow, it is applicant specific. Okay, that is what that question. Next, I repeat, you just go through the answer once actually fully, so that you will understand the sentence formation, all these things. And the next question is, Prachi and Co. self-assessed its CGST liability 90,000 for the month of April, but failed to make payment. Subsequently, department initiated penal proceedings against Prachi and Co. for recovery of penalty under section 74A for failure to pay that, and issued a show cause notice on 10th August. Prachi deposited the tax along with interest on 25th August. This for the month of April. Okay. And informed the department on the same day. Department is contending that he is liable to pay penalty of 45,000. That is 50% of 90,000 under CGST Act 2017. Examine the correctness taken by the department. See, when any self-assessed tax is not paid within 30 days from the due date. So here if you see, the due date here is April month, because April month it is 20th May is the due date. Within 30 days, yes, they have not paid. So obviously they should pay a penalty of 10% of tax or 20,000. That is 10,000 plus 10,000. CGST is GST. Oh, because the question is based on CGST, please let us not write 20,000 here. Let us take or 10,000, whichever is higher. Here the tax amount is 90,000, so it will be 9,000 or 10,000, whichever is higher. 10,000 is higher, so 10,000 should be the penalty. So that is what the concept here. Similar penalty will be applicable even under SGST Act. Right. Next, if you see the next one, RSM Limited has imported inputs without payment of duty under advance authorization. The CAF value of such inputs is 10 lakhs. The inputs are processed and final product is exported. Exports, see what is happening is RSM Limited is importing the inputs without any payment of tax under advance authorization, and the value is 10 lakhs. Now these are the only inputs which are used in that, and that has been processed and final product has been exported. Okay, so the exports made by RSM Limited are subject to general rate of value addition prescribed under advance authorization scheme. No other inputs being used, yes, in the processing. What should be the minimum FOB value of the exports made by RSM Limited as per provisions of advance authorization under FTP? See, under FTP, when you are allowed to import the inputs without paying taxes, sir, when it has been processed and the final product is exported, all these things, the FOB value of the exports, see, generally there should be a minimum value addition of 15%. So here 10 lakhs is the input cost, means whatever the CF value is there, that is important. CF value is there. On the CF value, at least 15% valuation should happen. So the FOB value of the exports should be at least 11 lakh 50,000. That is at least 15% value addition should have been done. That is what the question. Next, the last question, sixth question. So it is fully related to theory aspect. You can just make sure you go through these questions and answers, read the answers line by line carefully. You will get the clarity, all that, and you know it, and just a sort of revision. That's all. Nothing that great conceptually involved to discuss, right? Hope you have enjoyed the discussion of this mock test paper 1, and MTP 2 also will be releasing in our channel. So please make sure you are enjoying your preparation, and wishing you all the very best from my end. Thank you and Jai Hind.